All right. Morning, guys. It's an early one today, 7:15 Central Standard Time. A little shout out to my brother-in-law, Alan, on the West Coast. I know it's early, but it's 5:15 out there. And my buddy Ray in Missoula, Montana. He's, what is he, an hour behind, so 6:15. But we got a great show today, super interesting. Friend of mine, Scott Bushkie. Scott is the managing partner for Cornerstone Business Services. He's an M&A firm, but he's not swapping billion-dollar companies. He's doing a lot of small and medium-sized businesses. If you're not familiar with the show, our audience is primarily small business owners looking for fresh ideas on ways to pivot and grow their business. We've also got the book I wrote a few months ago, Restart, the Small Business Guide to Thriving During Chaos. It's been an Amazon bestseller. Book is $9.99 as an ebook and $14.99 for the paperback. So without further ado, Scott, welcome to the show.
Good morning, G.
So, all right, first of all, Scott, tell us a little bit about yourself. Obviously, someone just doesn't bounce straight out of college, and even an MBA probably shouldn't anyway, and go straight into M&A consulting. Talk to us a little bit about your background.
Yeah, a little bit of an interesting story. So, went to school at Whitewater. I got a business degree, marketing, emphasis in sales, and then ran a business between my junior and senior year called College Pro Painter. So I had that entrepreneurial spirit. Always loved sales, but knew that I wasn't as strong on the management and finance side. So I ended up working for Aldi Foods. I was the first person out of Whitewater to work for Aldi Foods as a district manager to get kind of shore up those skills a little bit. But then after 2 years, I knew I wanted to get back into sales, and I loved big ticket sales. I loved to solve problems that other people couldn't solve and help people out. And was looking around and basically fell into the business brokerage M&A world. My youngest brother's best friend's uncle was in this space, and that's what got me into this space. So, not a very thoughtful plan, but ignorance is bliss at the age of 24, and I was too dumb to know what I didn't know, and got in, worked for that firm for about 2.5 years, learned a lot, went to some different trade associations and took a bunch of courses, and then thought that there was a better way to do this and started Cornerstone in January 19, 2001. So it'll be 20 years here in a couple of months. And our focus is really to, take care of companies that are usually doing, $2 million to $100 million or $500,000 to $10 million in EBITDA, kind of that lower market space. But we work with, on the buy side, we work with individuals, who are kind of sick of corporate America and want to control their own destiny. So we're seeing a lot of that through COVID, a lot of good people that got let go. Due to no fault of their own. We deal with private equity firms, family offices, and of course, strategic buyers looking to grow. And most of our clients on the sell side are family-owned businesses or privately held companies that are looking to maximize what's important to them at the end of the day.
All right. And today's show, guys, just so you know, we're looking at the buyer side. We're going to do a follow-up show on the seller side, but why don't we're going to kind of work into this a little bit backwards, I guess, but to set the stage. I mean, we are living in very interesting times. What are some of I'm going to break this down into two questions. Sorry to hit you with a dual prong this early, but so my first part of the question is, what are the types of businesses where there's the greatest supply? My second part of the question is, what are the businesses that are in highest demand, right? So there's obviously plenty of restaurants for sale now, but that might not be the best thing to get in. So talk to us about the biggest supply of businesses.
Sure.
We've just never seen anything like this before.
Yeah, the biggest supply of companies are probably in that $0 to $1 million revenue range. The smaller the business with 5-10 employees, that's probably the largest supply out there right now. Obviously, restaurant hospitality is not in demand right now because they've got their own problems. So bars, restaurants, hotels, they're really struggling right now. We've got a client that's basically is in the food space and sells a lot of the bagels or English muffins into all the Marriotts around the country. And their numbers are down. They said basically if you're on the ocean, you're probably at about 100% because everybody's trying to go somewhere and do something fun. But any business hotel right now is probably about 10%. So it's just getting killed. But the most sought after companies, or where there's the most competition, is as you get larger. So the bigger the company, the more sought after, because it's basically one, there's just record amounts of money out there with private equity groups, family offices trying to, put money to work.
I'm just going to pause you right there.
Yeah.
Why is that? Why is there more money sitting around now than ever before?
Yeah. When I started 20 years ago, private equity was this really, no one really knew it. There was a handful of groups out there, and it was very, not a lot going on and not very transparent. And as it's become more and more mainstream, there's probably 4,000 different private equity firms out there just in the United States, not even worldwide. And their job is every single day to get up and look for companies to buy. So there's different types. So the committed funds are a group that, went out and raised, could be 100 million, could be $5 billion.
Right.
And said, okay, we're going to raise the money. We're going to find companies. We're going to invest in them. We're going to grow them, and we're going to sell them all within a 10-year window.
Okay. Yep.
So they don't have the luxury to say, oh, it's COVID, it's a recession, we'll just take 2 years off, because they only have a 10-year window. So they have to go out there. And what we're seeing right now is very interesting. So in the last two recessions,
let me just pause you on one.
Yeah.
So when these are the firms where they've got a solid management team in place, or maybe you're going to have a CEO parachute in, but this thing can manage itself. They're not putting in their own management team and going out finding 50 or 100 people to run this thing, right?
Correct. Yeah. Typically, they're looking for a good management team, and that's where those companies, to get that, they're usually looking at companies at least $1 million, typically $2 million in EBITDA, or around $10 million in sales. Yep. That's where they kind of start. Mm-hmm. So for the individual,
talk about EBITDA. I mean, I know what it is, but some of our audience might not.
So taking that net income and adding back your interest expense, income taxes, depreciation, and amortization,
right,
and kind of normalizing that number of what truly is that bottom line, before you make any other investments or anything along that line.
Okay. And all right, so there's the PE side. Let's talk about individuals, because a lot of people that watch, our show, they might be looking to get out of their own business, or there's quite a few mid-career folks as well. Talk about, maybe not the type of business, because that's been pretty varied, but the size, maybe the size of the businesses, and then let's dive into the steps, right? So I'm in career, I'm 45. I've either been let go. I'm just fed up with corporate. I don't want to deal with anymore. I want to control my own destiny.
Right.
Talk me through a typical situation, and I'm sure they're all different, to some degree.
Yeah. For the individual buyer, what we typically recommend is staying underneath that $2 million in EBITDA, only because if you start competing with private equity firms and family offices and companies, you're probably going to get outbid. Right. But if you get underneath that $2 million, but for sure underneath that $1 million, so let's just say a 5 multiple, so 5 times $1 million, a $5 million deal or less. We'll talk about those types of companies here. Okay. Yeah, so those are the highest, the highest inventory. There's the most inventory out there, and B, you have less competition, or at least it's more of a level playing field, because you're going up against other individuals.
Right.
And so some of the things that you want to look at if you're an individual buyer, or if you're a small business looking to grow through acquisition, because you can't, the thing we hear is, boy, it's just hard to find good people. So maybe I'll grow. I've made good money in the last 5-6 years. I'll grow through acquisition.
Okay.
Or I'll start my own company, like you talked about with those corporate refugees that are just sick of their own boss. And the first thing that we see, one of the most common mistakes is, I'm just going to grow for the sake of growth. Or, as an individual, what are you looking for, Dave? Well, I don't know. I'll know it when I see it. And, that theory is because people don't want to miss anything. They don't want to be pigeonholed. But what we found to be successful in buying your first company or to grow through acquisition, the more you can really bring things in and narrow it in and focus. So, there's different assessments that you can take out there. There's, what are you passionate about? What are your, where are your strong suits? And then really look for those, look for those types of companies, either where you can leverage your strong suit, or, where there's, their biggest weakness. A lot of times these companies have a great product or service, but they don't do sales. It's like, I've got a company right now, they're doing 13 million in sales, 4 million in EBITDA, and they haven't had a salesperson for 8 years. So somebody that could put in a sales program and run this thing, and that's at a larger stage. So most times they don't have a good sales program or any digital marketing or anything like that they could put in to take the company to the next level. But going back to that first point of, I'll know it when I see it. I had a mentor of mine back, 20 years ago who he had a closing ratio from a business broker M&A side that was much better than anybody else's.
Mm-hmm.
And I said, well, how do you get that? And he said, well, first of all, I screen the sellers and we make sure that they're realistic with their expectations. I said, yeah, we do that too. He said, but what I do differently is I don't let a buyer come in and just say, show me everything you've got. And, here's 8 deals and which one makes sense, because it just wasted everybody's time.
Right. So
when somebody came in and said, well, I'll know it when I see it. He said, okay, well, first I want you to do an exercise. And, I'm up here, in Green Bay. So I'll say, okay, well, head over to the Green Bay airport and just sit there. And this was before TSA and 9/11 and everything else, but go sit in the airport and just watch all the people walk by. And when you see your wife out there, the one that you want you to be your wife, you see somebody that's attractive or whatever it might be, go grab her, go down to the church, get married, and then come and sit down with your new wife. And now we'll have that discussion. He's like, you're insane. I would never just go pick somebody randomly out and say, yep, that's the one.
Right.
And he said, but that's what you're expecting by looking at everything of a company going, I'm going to keep looking at everything. You just don't, it allows you not to focus in. So that was one that I thought was very interesting. So really it's better to, go down a path. And if that doesn't work out, then go down a different path versus trying to look at everything and waste your time.
That's really interesting. I mean, in today's day, you'd be before TSA and it would probably be a woman looking for a husband, right? How times have changed.
Yes.
So, all right. So let's, okay. So I've got one point/question and then we'll kind of dive into the hot sectors. So, if, we're looking at these smaller firms, I mean, to some degree, we're buying a job, I'm guessing a lot of times. So, you're not going in probably, if you're this corporate refugee, to leave it to someone else. You're looking to bounce in. I mean, true or false? And that sounds like a rhetorical question, but.
No, absolutely. When you're buying something that's got $500,000 in EBITDA or cash flow or less, or 750, you're not getting a whole management team or anything else. This is coming in typically where the owner is looking to exit and retire. They'll come in, maybe transition for 6 months to 2 or 3 years, depending on what you need. And then they'll exit and then you'll take over the owner's seat and build the company from there.
Yeah. So I want to make sure my audience got that. So typically, I'm going to read between the lines here. It's not a good idea unless you really know the industry to say, yeah, give me the keys and I'll take over. You want to make sure, and I'm taking this metaphor too far, but you want to make sure they're probably sitting in the driver's seat to start with and you're a passenger.
Correct.
And maybe they go to a passenger and then maybe the back seat and then they get out. And I know that metaphor is really convoluted, but I mean, is that kind of the principle behind it?
Yeah, I think it really depends. Most likely, yes, but it really depends on how much the owner is the business. So that's one thing to look at too. If they've got, key employees that can really run the company. One thing I like to ask, our buyers that are looking to buy things is when you're talking with a seller, hey, when's the last time you've taken a vacation? How long did you take a vacation? Because if they go, man, I'm, because some of these owners wear this as a badge of honor, almost like, I haven't taken a vacation for 5 years. I work this thing, 17 hours a day and the weekends. Is that really what you want as a buyer? No, they've just lowered the value because they're the company, so if the owner has all the relationships with the customers, if they're the one quoting the jobs or they're the one inventing the products or service, if they're the subject matter expert, that might not be a transferable business. So if you do like that company, you're going to need he or she to stick around for probably 2 or 3 years to transition all that knowledge. But if someone can say, oh yeah, he just was out 2 weeks in Europe, last year, and I take 3 trips every year, that's a company that probably is something that's probably more valuable because it's not as reliant on the owner, but you still want them to probably stick around for at least 6 months to a year at some capacity.
And when we're saying stick around, is that coming into the office every day? It's, hey, they're going to Naples or Eagle River and they're retiring and they need to be accessible on the phone, or does it really depend on the situation?
It depends on the situation, again, of how much they're a part of that business and how much you understand the business. But, we've seen if you understand the business and they're not as needed, maybe it's coming in and not doing their job, but, for the next maybe 3 to 6 months, transitioning the business. And then the next 3 to 6 months after that, more of a, hey, let's get together on a monthly or quarterly basis. Or if I have any questions on a strategic question, you'll answer my phone call. And that's where, again, a lot of times these deals will have some seller financing or earnout in them. So that way, you keep the seller a little bit motivated so they can't just say, well, geez, I guess my phone doesn't work in Naples. I didn't get your last 5 calls. They'll take your call because there's still a big enough carrot sitting out there that they want to collect over the next 2 to 3 years.
Let's hit on that, and then I want to go to the hot sector. So you kind of talked about seller financing, and sometimes I hear the term a land contract, right? So I'm going to go back to I'm corporate refugee, and I've got experience in I don't know, let's say home remodeling, and there's this company that's just dominant in whatever the Madison area. And
sure.
They've scaled like crazy, especially during COVID, right? Because people are home and they're spending more money on that. So I'm looking to dive into that, and let's say I worked on a little bit, whatever, I maybe had another job, but I don't have the $2-3 million to buy this thing. And, maybe I'm having a tough time finding banks. Talk about that seller financing piece, because I think a lot of times the perception is, oh, I can't buy a business because I don't have $5 million sitting in the bank or whatever.
Right. Yeah. So structure, that's one of my points, is structure is probably more important to a buyer than purchase price is. If you can get close to the purchase price, I would take structure all day long. So, with these deals that are sub 5 million, a lot of people will utilize the SBA, which is a great program. But I would say the average deal out there is probably 85% cash at close, which is a combination of equity and senior debt or bank debt. And then 15-20% would be seller financing or earnout or things along that line. And the nice thing with the SBA is that, you can look at it. And if you do so, like if a seller does standby debt, which means basically, they can't get paid until the bank says they can get paid. It truly stands behind the bank. Some banks will look at that as actual equity. So you might be able to put only 10, maybe 15% down, have the seller do another 10%, and have the bank look at that as 20-25% equity. So you can get into a pretty good size deal for not a lot down. And the biggest thing is cash flow at the end of the day. So, yeah, there's a lot of different ways that you can structure a deal. I would say, worst case scenario is look at it kind of like a house at 20% down. But with SBA, I think you could probably get down to 10% with some creative structuring and put a deal together.
Okay. All right. Awesome. Okay. So now let's say I'm looking for a company and I'm somewhat agnostic of sector, right? I mean, we're going to steer clear of restaurants and retail now, just because, I mean, they're always a challenging business and challenging. And we'll just get beyond the fact that in general, probably not a good idea to go into right now. I mean, is that safe presumption?
Yeah, that's the restaurant bar business is a tough space to begin with. And it got a whole lot harder come last March.
Okay. Looks like we froze up a little bit. All right. Okay. There we go. We're back.
There you go.
Okay. So, all right. So let's talk about, if you weren't doing what you're doing, I mean, this is really, I want to really put you on the hot seat here. And there's 2 or 3 sectors, maybe a couple more that are just white hot where, you should jump into these things now / maybe the sector's really hot or they're recession proof.
Yeah. I would say, looking at, all these businesses that are quote unquote essential now and really haven't been affected by COVID, that's a great test to say, how did they get affected by 2008, 2009? How were they affected by COVID? And if they, like my company that I talked about before that, both through that, the plastic lumber manufacturer, they went right through 2009 and 10, and they went right through COVID, just like this. Right. That's a great company to buy. It's battle tested and you know what you've got. The food space is a hot space right now. A lot of people looking in that space. Manufacturing, if I had, manufacturing.
Let's drill down a little bit. So, when you say food space, I mean, is this co-packers? Is this original producers of food? Just to kind of let our audience know so they can kind of frame that up in their mind.
Yeah, I would say all of the above. Could be food, could be beverage, could be anything that supplies to that. Co-packers. We have a family friend in Iron Ridge that produces seasonings, and when he took over the family company, it was doing a couple million in sales. Now I think they're doing over 50 million in sales in the last 15 years. They've just blown it up. So a lot of private label type stuff for different group companies and grocery stores. Especially right now, if you're selling into grocery stores, it's very, very good. Obviously, if you're selling only into restaurants, you're
well,
getting
okay, hang on. Let's. I think I know why, but why is selling into grocery stores really good right now?
Just because people aren't going out to eat and they're cooking more for themselves. So, you know, and you know, you think, oh, it's always going to go back, but you know, some of these trends last a little bit longer, or you know, people are creatures of habit, and you know, so they figure out, oh, I can make more meals for myself, or I've got the time to be a little more creative and learn how to cook better, or whatever it may be.
Okay, let's. I want to talk a little bit about e-com. This sounds like a rhetorical question, but I mean, there's many businesses that their business models, at least their distribution on their business models, don't work. They're used to doing face-to-face, you know, and they need to start developing an e-com presence. Are there a lot of companies out there that are used to, you know, selling? It could be face-to-face or just traditional, you know, maybe delivery through a distributor, where if they change their distribution model, right? So if they developed an e-com presence, I mean, it could be something basic like Shopify or through Amazon or whatever, where the business would just explode, and someone mid-career, let's say someone like me, could come in and say, oh my God, you guys are missing the e-com piece. You put e-com in there, to the moon. Well,
and that's the exciting thing right now, is that there's been so much innovation due to necessity. But yeah, there's so many business owners, and again, we're dealing with, most of these companies selling are the baby boomers, and most of the boomers, especially, you know, I think, what are they, you know, I think the high end is like 75 or something like that right now. Those groups are typically not putting in e-commerce strategies or anything like that. So most of them are like old school, done it like they've always done it, but have a great product or service. Again, going back to where you can leverage your expertise, and a lot of it's around sales and e-commerce. Absolutely. I mean, we're working with a coffee company right now that is in multiple states, you know, 20 plus locations.
Wow.
And they had about.
I just want to clarify, when you say coffee company, are they getting the beans direct? Are they roasting them? I mean, talk a little bit about the scenario.
Sorry, yeah, they're buying the beans from South America, roasting, have a wholesale side, but also have 20 plus coffee cafes, retail locations.
Wow.
And they before COVID, they had like 5,000 or 10,000 users on an app, and the app wasn't very good, and they really didn't use it because everybody just came into their sites.
Right.
Because they had great locations.
Oh, this is on the retail side, obviously.
On the retail side, yes. And now they have, I think, about 75,000 active users because they really, pumped up their app and made it much more friendly. And now the loyalty for that is so much better than when we go back to normal. They're still going to have those users, and they've done curbside and all these things that they never did before, which they're going to keep, besides the people that will all come back into their cafes when that makes sense again. So it's those kinds of things that you can really innovate right now. And that's what we've seen with a lot of small businesses is people make good money in good times because you kind of make money in spite of yourselves because everybody's making good money. But truly fortunes are made in down times that people can really take their skill set and, innovate, put in some really good plays and get ahead of the competition, where most people go, have a victim mentality of woe's me, and I'm going to sit on my hands and hopefully I'll make it. And some will, a lot won't. Other people could take this, this challenge, head on and say, okay, how can I do this thing different? What does this now allow me to do? And we see some companies that are really taking advantage of the scenarios.
Okay. So let's talk. I'm ready. Let's just use a seasoning company, right? So let's say I've worked for, I don't know, a mid-tier food producer, and I'm looking to bail out, and I've come to you, and I'm looking at this firm. What are the things that I should be asking? Like the 5 or 10 things that must do.
So things that I would look at, first would be culture. What is the culture? How does that match up with how you want to run the company? Because if it's very democratic and you want to be, the person laying down the law, that's not going to work. They're all going to quit, or vice versa. Is there any kind of key employees there? If I'm buying your company, Dave, are you the whole business? Because if you are, it's really risky. So I'm going to have to put maybe more on earnout or more on seller financing to make sure that you stick around and those customers, aren't your best friends and they'll transition over to me. Customer concentration. Is the top customer 5% of the business or 55% of the business? You could have a company that's going like this, but I kind of call it like the Walmart effect. If you're growing and Walmart's just, you're riding the coattails of some big customer.
Right.
Good for cash flow, good for growth. But at the end of the day, all of a sudden the tail can wag the dog and they start squeezing you, or I don't find out that, boy, that the buyer at Walmart's your brother-in-law, and now I come in and, he doesn't have to buy from me anymore, and I lose 55% of my company. I'm out of business the next day. So that's kind of the silver bullet that can kill a lot of companies. So again, you can still buy those companies, but it goes back to structure of putting, much more on earnout to say, hey, as long as Walmart stays or whatever that big customer is stays, I'll continue to pay you over the next 3 years, but I want a 3-year earnout tied to, 40, 50% of the company's value, because that's how big the company, the client is.
Can you just talk about, again, I know what it is, can you just talk about earnout, what an earnout is for our audience?
Yeah, so it would be more performance-based. So a seller finance note is basically the seller's acting as the bank, but just like you have to pay the bank, you're liable to pay the seller back over a period of time, whether the company does well or not. Where an earnout is if the company does well and hits it in either certain benchmarks or whatever it might be, or a percentage of revenue or a percentage of gross profit or EBITDA, you'll pay the seller, X dollars of money over 1, 2, 3 years.
Right.
And so it takes some of the risk off of the buyer and puts it onto the seller to maintain the business.
Right.
The last couple of points that I'd make is, look at their accounting. Is it clean? Is it organized? Can you understand it? Or are they rechanging the accounts every year and you can't get your arms around it? And then again, going back to that structure, I can't emphasize that enough. And, one of the points that I tell most of my buyers, and this is one where you'll be able to buy a company potentially for less money than another buyer would, is too many times buyers go in and they're ready to negotiate because, again, this is just a transaction and every business has flaws. I've not found a company in 22 years that's a perfect company yet. And so to go in and kind of guns blazing and, hey, I want to buy this company, but this is wrong and this is wrong and this is wrong. So I want a lesser price for all these different reasons. And what the seller's hearing is not, okay, Dave just wants to negotiate on Cornerstone, and I know there's some things wrong, and I'm rational about it. Most business owners think about selling their business as giving up one of their kids for adoption.
100%.
So when you go in and say, hey, this is wrong, I don't hear, okay, he's just being rational, and I know my business isn't perfect. He's going, boy, Scott, you've got one dumb, ugly-looking kid, and I want to adopt it. And I'm going, there's no way in heck I'm going to, at any price, I'm going to let Dave buy my company or adopt my kids. So take the time to get to know the owner. It's funny because most people think, oh, it's all about money, especially in the Midwest. It's not all about the money. It's about, what's important to them. So asking a business owner, hey, you built up a nice business here. I'd love to learn more about it. Tell me more about it. How did you get started? What's important to you? What are you looking for in a transaction? Get to know them, because I can tell you, I bet you 2 or 3 out of 5 times I get a client with multiple offers and they'll take a lesser offer because they just like the buyer better, or they feel it's a better fit, or they listen to me and they're going to take care of my employees, or whatever it might be that's important to them. It's not always about the money. So if you can ask them what's important to them, build some rapport, and they get them to like you, there's going to be time for negotiations, but that's a second stage. And then lastly, know that time kills all deals. That if you drag this process out, eventually the seller's just going to say, you know what, Dave, it's just not meant to be. I like you. I want you to buy it, but I'm tired. I want to sell my company. I'm going to go a different way. So you need to have your team in place, get pre-approved with an SBA lender, have an M&A attorney on staff, an accountant, an M&A advisor, valuation person, have all those people ready, have your team built. So when you find the right company, you can move efficiently and not slow the process down.
Gotcha. I mean, obviously the obvious example is getting financing for a house, before you buy. All right. So if you guys have questions, if you want to start asking those now, that's fine. And just start teeing those up. So let's get into quote unquote inventory, right? So what's some of the stuff that, sort of businesses that you are, representing right now?
Yeah, we've got a plastic lumber company that is very interesting. We've got a company that produces software for the government in different areas. That's really interesting. We have a company that's in the flooring space. So like you mentioned before, someone who has maybe more of a construction or retail background, that's an interesting, smaller company. We are talking to an AV company that puts in AV systems for colleges and churches and offices. We have another company that sells a very unique product to the Army, Navy, kind of DoD type, CIA
really
type groups. Trying to think of what else we are talking. We have some people are looking. We have a separate division that does convenience stores and C-stores. So we've done probably. When I started 20 years ago, that was one of the areas that I focused in due to my Aldi background. So we got a gentleman that just focuses on convenience stores that usually in that $1 million or less range. We have it's been interesting. We just started from March until the end of August. We usually get a client or two a month. We didn't see any new clients just because everybody was sitting on their hands and waiting to see what was going on. And now finally after Labor Day, things started opening up again on the sell side, and we're getting more clients kind of coming in the door right now.
Okay. So just waiting for a question. I think Ray told me he has one, and Phil was looking at a company, but so guys, bounce in if you got a question. So let's, and this is kind of teeing up for the next show that we're going to have. So we talked about the buyer side, and you kind of hit on this, the seller side and how it's like your kid, and it's kind of like when you're getting investment, right? And the angel investors call it the ugly baby. So you're looking to sell. What are some of the recommendations that you have for the seller? And again, this will tee us up for our next show.
Yeah, I would say, well, the biggest thing that you can do is prepare. Most companies do not prepare. It's their largest financial transaction of their life. And they just wake up one day and go, you know what? It's not fun anymore. I think it's time to sell the business, or something happens to them. 50% of the time it's, death, divorce, disability, disagreement with the partner and things like that. So you want to go out on your terms. It's prepare. And we'll talk more about this in the next section, but we call it the three-legged stool, which is, and I forgot to mention, we do estimates of value, for $2,000. We'll help people understand if they're looking to buy a company or sell a company, or for, buy, sell assurance, whatever, we'll help them understand what the value of the company is, but understand the value of your company. Understand then, so let's just say it's $3 million. Then sit down with your CPA and say, okay, if I get $3 million, what am I going to net out after taxes and fees and debt and things along that line? And then sit down with your financial advisor and say, okay, what do I need to live my ideal lifestyle? What does that look like? Because if you can, who cares if you get 3 million, if you net out 1.5, but you need $2 million to live your ideal lifestyle, then either you have to change your ideal lifestyle, or we can give you different ideas of what you can do to, kind of double down and really focus to grow the value of your business. But once you know that the sale price, the net number will meet or exceed the lifestyle number, then why wait? Go and enjoy life. We've seen too many people just not know how to get out of it, emotionally can't let go, and they hang on too long. And that's when bad things usually happen. Right.
Okay. So we've got a question in from my friend Ray from Missoula. How important is it for business owners to have a CRM in place, or, and maybe we'll make this a little bit more broad, like marketing automation systems where they've just got, that completely dialed in, that tech to facilitate sales?
Yeah, obviously those are the intangibles that don't show up on the balance sheet or the P&L, but the more the processes are documented, the more the customers are documented, it's not just all in the owner's head, the more saleable a company will be.
Right.
So you don't need, all the bells and whistles, but just to have all your process systems documented. There's a lot of different programs out there and companies that you can help you with that. But yeah, if it's all written down in a notepad and it's all inside the owner's head, that you're going to have a hard time selling the company.
And Ray's question actually tees up something we're going to be doing, and then we're going to close out the show, Scott, and ask for your contact info. So one of the things I've been doing, guys, after over the last few months is talking to more and more small businesses and asking how I can help. And one of the things that I'm finding is there's a gap between what they know now, when it comes to marketing specifically, right? Digital marketing, and the tools that are out there. So there's a lot of tools out there, like Ray, has a company called Big Sky Amplify, and they sell marketing automation software. And there's CRM specifically, and even more kind of rudimentary stuff, just like Facebook. And I started the digital marketing curriculum at UW-Madison, and I'm going to be rolling out some digital marketing classes where people are going to be able to go online 30 minutes, and learn those skills and that gap. I mean, really affordable. Again, you can take them real time. So, all right, let's kind of wrap up here, Scott. So again, we've got those mid-career folks that are looking to buy, or someone that's looking to sell. How can they reach you?
Sure. You can give me a call. The office number here for Cornerstone is 920-436-9890. Okay. Our website is www.cornerstone and then a dash or a hyphen business.com. And otherwise, it's you can email me at sbushkie, which is BUSHKIE at cornerstone-business.com.
Okay, awesome. Hey, thanks for the show, man. What a lot of meat in here. This was great. And we'll look forward to the second side of this equation, which is the seller side. So thanks again. Have an awesome day, and everybody be safe out there.
Sounds good. Thanks, Dave. Have a great day.
Thanks a lot.